Okay, I'm recording this video after the close of trade on Friday 16th of April 2010, and wow, what a day, and everybody is talking about this. This is Goldman Sachs daily chart. Goldman Sachs down 13% on the day, huge volume traded after the SEC charged Goldman Sachs with fraud, accused them of misrepresenting the facts in a CDO deal under the name of Abacus. It's a civil suit right now. It might turn into a criminal case, you never know. And this has had a huge impact on the market, and I want to talk a little bit about that today. If you've got the opportunity, go on and check the Yahoo Tech Ticker. One of my favorite guys, Bill Black, talks about this deal along with Barry Ritholtz, and the quote from Bill Black was, "It's rotten to the core." And the question is this going to change the way that people look at this entire crisis? I want to talk about this and market manipulation and so on. This is the Goldman Sachs chart. Interestingly, when I look at my kind of weekly chart, this happens to be an end of trend warning signal on the Goldman Sachs chart that is actually happening underneath a monthly cyclical turning point, having had kind of exhaustion volume on the upside here. So I think this is definitely going to change the way people view kind of the Goldman Sachs stock plus the stock market in a number of ways. But let me just go through some of my charts, and I'm going to go back to my 4500 tick bar chart and talk about exhaustion volume and the latest video that I did on Wednesday. Now on Wednesday I had a very animated video just talking about exhaustion volume and not taking trades before you see exhaustion volume, and I was talking on Wednesday that we had exhaustion volume here on the better momentum indicator, and all of these professional bars, you can see these blue bars coming into the close on Wednesday showing the professionals were selling into this close. That was very clear on Thursday. We kind of broke these highs by a couple of points, and again professionals selling these highs. We come back up to test, we sell the highs again, and coming into the close, professionals on these up bars into these highs at 1208, selling those highs. This is professional distribution happening here. Now who knows whether the professionals knew. I mean, this is a huge story, the SEC charging Goldman Sachs with fraud. Absolutely, I cannot believe that a story like that was not being whispered about in the days leading up to Friday. So I mean, this is definitely professional distribution happening at these highs. Whether they specifically knew what was going to be happening on Friday, I'm not willing to say, but the point is you can see the professionals at work here, and so you have to take advantage of trading with the professionals. When you see the professionals like this exiting on the highs, they're selling at these highs at 1208, 1210, you have to know that the market's going to reverse and turn around. Now interestingly, the high for this is what happened subsequently, so the market kind of took off on Friday to the downside. Interestingly, the high for Thursday and the high of this move was a second cyclical turn after an end of trend warning signal here. So kind of broke into an up end of trend warning signal, cyclical turn, second cyclical turn marked the highs with all this professional distribution going on. I think the reason why these second cyclical turns after an end of trend warning signal tend to work quite well is that they're showing that the end of trend is showing an exhaustion move in terms of a trend. A trend is not going to reverse straight away from an uptrend into a downtrend. You're going to see some kind of congestion, and that's what the cyclical swings are showing us in that congestion during Thursday's trade before it kind of reversed and went the other way. Now let me just bunch this chart up. So we've had this move here. Wednesday was our exhaustion buying activity at these highs, professional activity. We've now, at the close of trade on Friday, had exhaustion selling on the reverse side, and coming into these lows you can see professional accumulation here, and at the close some professional accumulation. Now obviously that's closing out positions at the end of the day and end of the week, but we've also had end of trend warning signal here and a lot of bullish divergence prior to the exhaustion selling signal at the end of the day. So I wouldn't be surprised if we saw a little bit of a bounce. We want to see bullish divergence before we start saying that there's a reversal of this trend, but just be aware we've had exhaustion selling on the downside at this point. So just similar to this, we have exhaustion buying on the upside, then we go through a period where we have bearish divergence happening, bearish divergence signal, lovely signal here with a pullback and a downtrend signal, and the market kind of takes off to the downside. So we need to see a similar type of pattern after this selling exhaustion volume to see some kind of move to the upside. For me, I'm starting to think this is going to be a strong move on the downside. Just recapping on the oscillators position here. The beta trend oscillator turned a couple of days ago. We went short with this swing trade at we were short at 11.93. We're kind of marginally in the money at the moment on that trade, which is good. But this is kind of a classic way these swing trading oscillators work. The trend oscillator is a leading indicator, tends to signal first. Put call ratio is the second one. We had this extraordinary reading up here at 468, which is the highest reading ever recorded on put call ratio oscillator here. And then yesterday, on Thursday, you can see the put call ratio turned on that day. That was kind of marked the high of this move. And then today, the smart money oscillator moved down. So TRIN is the first, put call ratio is the second, the third one is a smart money oscillator to turn here. So that's kind of how these swing trading oscillators tend to work. So I'm expecting that we're going to have a little bit of weakness in the market kind of going forward. Not looked at the commitment of traders numbers for this weekend yet, but I'll do a video follow up on that shortly. Got a question on the better volume indicator, and I should probably just show the what indicators I've got on the chart here. Okay, here we go. We've got better volume indicator shown here as a histogram underneath the price bars, and then the price bars themselves have the better volume paint bar printed on. Just want to make a couple of points here. The first one is better volume has been a great indicator for me, but I've kind of moved on and I use a version called Better Pro-Am. It's not dissimilar to better volume, but for my purposes works a lot better, and I use it in my day trading. But better volume is out there. It's been downloaded. I forget how many times, but the code is available. It's free. I still think it's good, kind of useful code. And what we've just had print here on this top is one of my favorite patterns, the red, white, and blue pattern, and I've posted updates about this before. And you can see today's activity. We had huge volume, 3.3 million contracts traded. It was an exhaustion down day, so painted white as a paint bar here. And on Wednesday's trade, what we had was a red paint bar here showing that this was exhaustion volume on the upside, followed by on Thursday this is a high volume churn bar showing that that's relatively high volume but low range. And when we have high volume and low range, that means at tops and bottoms, that means that we've got people taking profits. So as the market tries to make new highs here on the Thursday, there are increasing sellers coming in and compressing the range of the bars, and you get similar patterns on bottoms as well. So, and then followed by an exhaustion volume down day with this white bar here. So this is my red, white, and blue pattern that often signals kind of significant turning points here. So just showing that on this chart here. We haven't had many of these. This is a daily chart of the Emini over the last few months, but let me just show you some of the other signals and whether they worked out or not. Back in March, April, we had this signal here, exhaustion volume, high volume churn, exhaustion volume down. This one didn't work out, actually signaled a low in the market and reversed from there. This particular signal, we had a exhaustion volume down, high volume churn, exhaustion volume up. We retested those lows and then the market kind of took off. This one here was a good signal as well. We had exhaustion volume down, high volume churn, a couple of exhaustion volume up bars, and the market kind of never looked back at that 950 level and so on. So let's wait and see if there's a significant turning point in the marketplace with this red, white, and blue signal here. But just wanted to recap on that. Better volume indicator, still out there, still free, still pretty useful indicator, I believe. But I've kind of moved on a little bit, and so I'm using my Better Pro-Am indicator instead. We could be seeing a significant change in tenor for the market kind of going forward. It was interesting, the E-mini and all the indices, stock indices sold off, as well as crude oil sold off on low volume, so not so sure about that. But then we had a surge in the US dollar, had a surge in US bonds, interest rates were down and gold was down, so we're starting to move away from this kind of carry trade into the carry trade and the risk trade into the safe bet of US bonds and the dollar index. So let's see what happens next week.